Welcome to Channel's Business Global with me, Juliana Olayinka, from our studios here in London. Over the next half an hour, we'll be looking beyond the business headlines by giving you in-depth perspective on the stories that are affecting all of us. Coming up on today's show, from today, the new energy price cap has increased for approximately 22 million customers across the UK. The new tariff has been driven by a record rise in global gas prices over the last 6 months, with wholesale prices quadrupling in the last year. As a result, charities expect millions of families to be plunged into poverty as the UK's cost of living crisis expands. Professor Prem Sikka, a sitting member of the UK's House of Lords, will be joining me for his insights on how Britain has got to such a serious state of emergency. And Microsoft projects Africa's agri-tech industry will reach a value of $1 trillion by 2030. The co-founder and CEO of Thrive Agric, Uka Eje, will be joining me from Abuja to discuss the surge of investment in agri-tech businesses. Then later, I'll be looking back at some of the biggest business stories of the week. But first, let's have a look at trade between the UK and Africa, which, according to the most recent data, is valued at over £50 billion. Alongside the environmental benefits, increased trade and investment between the UK and the continent creates opportunities for firms and consumers by lowering prices and opening fast-growing digital markets for exporters. Earlier, I spoke with Marco Foglione, the Director General at the Institute of Export and International Trade, a professional membership body offering business support, training and qualifications. Marco Foglione, thank you so much for joining me here in the studio this morning. So has Africa become a market of interest for your members over the past couple of years?
Well, good morning, and thank you for inviting me to come and have the conversation. And Africa is an incredibly important marketplace and region. And you can see that certainly since the UK has left the EU, a very clear determination to reach out and build a base of engagement focused on free trade and support for a global and international role in trade. And this year we hosted the second Africa Trade and Investment Summit in London. And I think that shows a very clear commitment and dedication from the UK government to invest and develop close partnerships with the African nations.
Absolutely, it's incredible. And we were at the first investment conference just before, of course, COVID hit, a really big summit for Boris Johnson. The second one that took place this year was virtual. And the UK government have since launched this new digital tool to link UK businesses with African businesses and to ensure that they have up-to-date information on trade and opportunities and services. Mm-hmm. How important is that digital connection between the two nations?
Well, it's absolutely vital. And it shows both a commitment and dedication from the UK government in establishing the platform, which gives a great opportunity for businesses both in the UK and in Africa to connect, to grow their relationships and to build business opportunities. But most importantly, of course, what was vital to success is having access to the funding to support international trade. And so that digital platform provides access to all of that for the businesses.
Absolutely. I've got to tell you, though, the majority of African consumers, Marco, are still trading within the informal economy, and they enjoy it. They like spending cash. And do you find that that may be a hurdle for some UK businesses trying to understand the nuances within Africa? Millions of people are still not able to connect online.
Yes, but Africa is moving at great pace and actually has the advantage of not having to deal with legacy systems. So the straight-to-mobile opportunities that exist, and in fact, the West and the UK can learn from Africa with regards to its mobile trade and the way in which it uses microfinancing driven by mobile engagement. So actually, the relationship, the partnership is two-way. And the Institute exists. Its core rationale is to empower organisations and equip individuals with the expertise to trade effectively, sustainably and commercially. So all of that supports actually that exchange of knowledge and expertise.
Can you tell us a little bit more, Marco, about some of the training opportunities available at the Institute of Export and International Trade for those who want it, who are living in Nigeria?
We have the Diploma in International Trade that we are delivering currently in Nigeria with the support of the NEPC. But we are expanding that. First cohort have graduated, a second cohort is going through, and the intention is to roll that programme out across the whole of Nigeria. It's very clear that the Nigerian government see its role and its growing role of influence internationally as key to the development and building that international trade. You know, never has Nigeria had I think, a more important role globally and a higher profile than it does now. We have Dr. Ngozi, obviously, at the WTO. You've got the Fintech hub, which is a global Fintech hub in Lagos. And you mentioned earlier that you've got a very successful Nigerian businessman you'll be speaking with, who has grown Agric Tech. You know, Nigeria has the huge potential to not just lead the way in which trade takes place intra-Africa, across Africa, but also how African nations engage in the global marketplaces.
Absolutely. A lot of our viewers are obviously interested in Brexit. I've been discussing it on my show extensively over the past couple of years, and surprise, surprise, we actually got some decent data, trade data from January, showing that there's been an increase in EU imports after months, of course, of record lows. Do you think members have now eased into the Brexit transition? There are a lot of the scary stories we hear are just headlines, but really lots of businesses are getting on with exporting and importing.
Yeah. Trade is continuing and trade will continue, and there was initially some concern as to actually what the new relationship between the UK and the EU would mean, how the processes would work, how companies would adapt, and a lot, as you've said, of the scare stories have proven not to be a reality. There have been easements and reasons for that. But the biggest challenges that businesses have faced is not the new relationship or the new structural relationship between the UK and the EU. It's been to do with COVID and then the subsequent impact on global supply and value chains. And those are much more significant, and we're only beginning to see the impact of those. Businesses are adapting to them, the way in which they engage, the way in which they move goods has had to change and continues to change. But absolutely, as you said, the trade data shows that trade between the nations is now beginning to recover.
Absolutely. Another huge issue that we're still in is this Russian invasion of Ukraine. Some would say it's changed the world forever. It's certainly changed the way the world is going to trade with itself. Has this been an issue for members recently?
The challenge is to do with the global supply chains, and it's shown the impact on a truly integrated trade flow, what happens when those get disrupted. Now, we had the impact from COVID, and now we've got the impact in Ukraine, and I'm afraid to say I don't think we've really seen yet the full impact of what's happening in Ukraine, and that's going to be impact on commodity prices. There are impacts on the flows of goods and the ports that are used and the trading routes. And I think the world will have to take a long, hard look at itself, the way in which businesses operate, will have to take a long, hard look to make sure that they are not so exposed to these sort of rogue behaviours.
Absolutely. Marco Forgione, Director General at the Institute of Export and International Trade. Thank you so much for your insights. Thank you, Marco.
Pleasure. Thank you.
Let's change gears now and discuss the cost of living crisis that is squeezing low-income families across the UK. From today, millions of people will face higher energy bills. Chancellor Rishi Sunak has been forced to defend last week's spring statement, which included a 5p cut to fuel duty, a £3,000 increase to the threshold at which people start paying national insurance, and a promise to cut income tax by 1p in 2024. Reports suggest that the Chancellor is now considering a new tax rebate as part of further support for families. Well, for more on this, I'm now being joined by Professor Prem Sikka, a sitting member of the UK's House of Lords. Lord Prem Seeker, it's an absolute pleasure to be speaking with you on Channel's Business Global again. The headlines say that UK families are projected to suffer the toughest squeeze since the aftermath of the Second World War. What does that mean in real terms?
Well, in real terms, in the next year, the average household will see its income shrink by about £1,100. That is in real terms. We have a rate of inflation at the moment about 8.2%, and it's rising, and the government is hiking up taxes as well. So the average household is going to be hit pretty badly. And indeed, it's the biggest fall in living standards since the mid-1950s, and there is no respite in sight.
Yes, Chancellor Rishi Sunak, who a couple of months ago was being picked to be the next Prime Minister, but not since the delivery of that spring statement. Over the weekend, there have been a flurry of reports suggesting the Chancellor will be preparing a further multi-billion-pound bailout in the autumn when energy bills are expected to be increased again. Do you think families can wait that long?
No, I don't think they can. I mean, when you look at even the level of savings, the median savings, household savings are about £12,500. That is the gross lifetime. And the bottom 25% of the population only has £2,100 of savings. And people are effectively one paycheck away from starvation.
God, it's very bleak, isn't it? Now, the Household Support Fund, that was a £500 million fund for local authorities, and they were able to give out those grants to families that needed it most. Last week, the Chancellor doubled that fund to £1 billion. What more do you think can be done?
We need to completely change the economic policies. When you look at the broader scene, what you find is that in 1976, workers' share of the GDP was 65.1%. It is now 48.7%. That decline is unmatched in any other industrialized nation. So we need a complete change of government policies, which increases workers' share of the GDP so that people don't have to queue up for charities and food banks in order to make ends meet. And so the government really needs to completely change its economic policies.
Yes, absolutely. I mentioned that Chancellor Rishi Sunak, he's polling really low now, despite people rallying behind him at the beginning of the pandemic. Where do you think he's gone wrong?
I think he's gone completely wrong because he's adopted regressive policies. Even when you look at tax should be used to redistribute. So what we find is that the top 10% of the richest households are paying about 33.5% of their income in direct and indirect taxes, but the bottom 10% are paying about 47% of their income in direct and indirect taxes. So he's adopted totally regressive tax policies and also decimated our public services. We have 6.1 million people waiting for appointment at a hospital, which is unheard of, which is 3 times what it was in 2010. So the government's basically gone off track, and this is really the outcome.
Before I let you go, Lord Prem, we were expecting loads of giveaways. We got the reduction of 5 pence per litre of fuel duty. Do you think the Chancellor was wrong not to scrap the planned increase in national insurance tax in the next couple of weeks?
He's absolutely wrong on that. He should have scrapped all the tax rises. He should have imposed a windfall tax on oil and gas companies. Look, before our energy prices are going to rise from about £1,200 average household bill to about £3,000 by the end of the year. The average profit per household for oil and gas companies will increase from about £47 to £1,700. Wow. So we have to remember that the cost of extracting oil, gas from Mother Earth or from sea hasn't changed. What has changed is the selling price, hence the huge amount of profiteering. and the government has done absolutely nothing to deal with that.
Well, the tension is certainly growing on the streets. There's a backlash, not just outside, but inside the Commons too. Lord Prem Seeker, an absolute pleasure speaking to you once again. Thank you so much for joining me on Channel's Business Global today. In a moment, I'll be joined by the co-founder and CEO of Thrive Agric, Uka Ije. But before then, here's some business news for you. China's biggest city has been split in two and begun the country's biggest lockdown since the early months of the pandemic as Shanghai battles to control a growing COVID outbreak. A further 3,500 COVID cases were reported in Shanghai last weekend, according to data from the National Health Commission. The lockdown will be in two phases, with the financial district and nearby areas locked down until today to allow for mass testing. NatWest has bought back £1.2 billion of shares from the UK government, reducing the taxpayer's stake in the bank to below 50%. In the depths of the 2008 banking crisis, the government injected £45.5 billion of fresh capital into the bank when it was then known as Royal Bank of Scotland. This was because it was hit by massive losses on subprime mortgages. At the time, the government said the bailout of the sector was not an attempt to nationalise the banks, but they would be sold back at the right time. Shares in NatWest rose 1.45% following the announcement. The UK Transport Secretary Grant Shapps is demanding that P&O Ferries reinstate the 800 workers it sacked earlier this month as the government prepares to overhaul laws on pay for seafarers. P&O is facing a major backlash after making hundreds of staff redundant without notice, with plans to replace them with agency staff on an average wage of just £5.50 an hour. Now to our next topic. With agriculture sustaining 70% of Africa's livelihoods, investors believe the continent is poised to become the global centre of agri-tech solutions, as the past few years has witnessed exponential growth in e-agriculture solutions. Smallholder farmers account for 80% of Africa's farming community, and agribusiness are providing innovative tech services to ensure they stay connected with consumers, creditors and regulators. One such firm is Thrive Agric, a fast-growing agricultural technology company based in Nigeria. The company's co-founder and CEO, Uka Ije, joins me now from Abuja. Uka Ije, thank you so much for joining me on Channel's Business Global. Now, you're in a big sector because Microsoft projects agri-tech will reach a value of $1 trillion by 2030. Where are you expecting Thrive Agric to be by that time?
All right, thank you. Thank you so much for having me. It's so good to be here. So what we are looking at doing, in fact, what we do at Thrive Agric is to work with smallholder farmers to give them access to finance, to access to inputs and access to markets. So what we are looking at doing is to scale up that number, is to be able to occupy a thought leadership position by 2030. Our goal is to increase our total number of farmers to about 10 million by that time, and also to have a footprint in major African countries and to build an Africa that feeds the world and itself.
Absolutely. Those are really large visions. And I know that you've made some huge strides over the past couple of years. But even though we know that, being able to be digital is critical, especially because of COVID-19, that's really accelerated the push. But we know that the vast majority of Africans, especially those on low or no incomes, don't have this digital infrastructure. How have you been able to tackle that over the past couple of years? And what are you going to do to make sure you can reach your goal by 2030?
All right. So one of the things we noticed when we started this in 2017 with the smallholder farmers was they have never always been digitally included. And many of the smallholder farmers use feature phones, and a lot number of them still use feature phones. So what we had to do even before COVID and even during COVID, we saw this a lot more. We had to build a proprietary technology called an AOS, Agricultural Operating System, internally. And the goal for the AOS is to be able to capture the farmer's biodata end to end, and also the entire operational activities of this farmer, right from the point of planting down to the point where inputs are given, the planting down to the point of harvesting, and to when their inventories, their output is being stored. And also what the AOS helps to do is pretty much as the farmers could not access a mobile phone, and there was no access to the internet. He works totally online or offline. So every single thing that happens end to end in the field can be captured, and it gives visibility to the people who want to, the off-takers, the food processors who want to buy the foods from the farmers. So our goal is to be able to create social inclusion, as well as creating financial inclusion for the smallholder farmers using the OS.
Absolutely. Social inclusion is absolutely vital. Another vital topic that's emerged, particularly over the past few months since COP26, is tackling the climate emergency. How has that changed sustainable agricultural practices?
And, working over the years and scaling the number of farmers on our platform, what we have been able to address critically is to be able to first scale up the numbers of farmers on our platform. And what that has positioned us as a feedback loop for our input providers. And then so they can get feedback of what is happening on the field, and that helps them to provide more like climate-resistant variety of seeds, or also climate supporting inputs. That helps increase the yield for the smallholder farmers. And the information they get on the field serves as research purposes, and also as an information to improve performance for the farmers.
Absolutely. We know that Africa needs to start feeding itself. It has the capabilities of feeding itself, which is why agriculture is such an important sector, but it doesn't really grab the headlines as much as the fintech guys. Again, I was telling you off air, Uke, that when I read your profile, I was absolutely amazed. You've managed to achieve so much, and I'm sure there are so many of people like you within the agri-tech sector. Do you find sometimes you have to kind of nudge the fintech competitors out of the way to be successful in your funding rounds?
Yeah, I think it's always interesting to see every time. And one of the encouragements that I always feel is, one, we know the value of food, right, across the world. And that is one. And also, one of the value for a raise like this is it helps investors alike and other participators who are also interested in this to see that it's pretty promising. Fintech is a great play. Another plays are really exciting to watch. But also Agric Tech is, as much as it's beyond just putting seeds on the ground. There are quite a number of things that happen from when the seed is put on the ground to when it is moved, the supply chain of food. So I believe that one of the things that this raise helps to steer is it steers a lot of business-minded people, and the more we increase participation, the more the interest comes in from investors. And I think those are the kind of things that we'll begin to see on a larger scale and stage.
Yes, it is a fundamental sector. Before I let you go, just tell us about some of the plans Thrive Agric have before the end of the year.
Okay, critically, one of the things that this raise has positioned us to do, and the need for it, is to increase the number of farmers who are on our network. We want to be able to scale that number to over 500,000 farmers who will be all embedded in the AOS. That's one. Two, we also want to be able to increase our footprints, not just in Nigeria, expanding in Nigeria and also across Africa, Kenya, Zambia, and also in Ghana. So we want to be able to increase that presence, which it's a critical objective to build an Africa that feeds the world and itself. And also, we also want to be able to position ourselves out there to a lot more institutional investors who would be interested in this space and are happy to work with us in this road.
Well, I'm sure you're going to get there, and please do come back on the show to update us on your next successful round of funding. Uka Eje, co-founder and CEO of Thrive Agric, thank you so much for joining me on Channels Business Global today. Well, sadly, that's all we have time for you today, but do get in touch with your comments and suggestions. I'll see you at the same time next week for more in-depth business analysis on Channels Business Global. Goodbye.